Hey everybody, welcome back. This is Kyle Bazzi, president at Benzinga.com, and we are here with the Benzinga Fintech Awards looking for innovations in product and companies that are helping you either make or save money. It's all about creating wealth. And next up, we have Quants Capital and CEO Gokhan Kisacikoglu. How'd I do on the pronunciation?
Very good, thank you.
All right, nailed it. I love these kind of innovations. We are talking about bringing professional investment grade platforms and software and democratizing them, bringing them down so the everyday user can have access to it. Gokhan, before I pitch the whole company for you, you got me all amped up here before we got live on the interview. Let's go over the basics of Quants Capital. What is it? How did you guys start? Where are you guys at? Things like that.
Quants Capital was started in 2010. We provide investment platforms and risk management solutions for our high net worth clients, and we are located in Los Angeles, California. And now we are essentially gearing up to launch this online for everyone.
All right, so how many employees are at the company right now?
We're only 3 guys, but looking to essentially just size up for 2015.
All right, so let's go into what Quants Capital actually does. You said you're taking stuff that you're already working on with high net worth individuals, your clients, and now bringing and making the software accessible to everybody. What is this software and what's so special about it?
Our software has a track record. First of all, what we do is we find pricing odds at in every market, in every asset, and we're specialized in risk management solutions and asset allocation solutions for diverse trader or investor categories, from simple active investors to very advanced institutional investors. We have solutions for them. What sets our software or our approach or investment philosophy, let's say, apart is we are not looking for let's say market timing in this entire program, but rather risk management and sound and long-term investments. But I must emphasize that as we have trading solutions for everyone, from active investors, from index investments to industries or stocks, to more advanced traders oriented long short and portfolio models for options. We would like to offer a complete risk management and investment allocation platform online.
All right, let's dive a little bit deeper now. So that's what you're doing. How are you doing that? When you say the platform that you're bringing to people, walk us through for people that don't know. I get into Quants Capital, and what do I actually do? Am I following your strategy? Am I using it with my strategy, and it does analysis on my risk in the market right now?
Okay, this is not a hedge fund replication or AUM-based service. This is really a service where you might have a portfolio already, and you might simply enter your portfolio, and it will tell you based on the current market scenarios. It's one of our principles that we do not try to time, but we do have a clear understanding about the pricing odds on every security, and we would like to show to anyone who puts their portfolio what kind of risks they are exposed, and what they can do about it, and whether there are opportunities that they can consider based on our model portfolios. We will offer full transparency on these models with the full and including the pricing model, the pricing odds model, with the full historical performance to what they've done, how they allocated assets, and what they are capable on a demo site. But at the same time, a user will be able to see, first of all, their own portfolio's risk and what they can do about it to maximize their return. And from there, we move on to the next step and suggest them, okay, here are the possible models that may be applicable to your investment style, and they can pick and choose from these. Everything is driven by their risk tolerance and their own risk uh, investment horizons, because it will be very difficult to offer a bunch of hedge fund replication services, or it would be very difficult to fit everybody into one model. So we start with the client first, with their portfolios first, and then understand their investment style, what they feel comfortable with, and then from there we introduce the next level and next step of models. We are going to have, along with our demos, a training material as well, if they would like to try different investment models.
Right on. So there's a lot of strategies out there, and a ton of different people that want to tell you what to do with your money. I like this because it's starting to look at the way that the professionals have done it, and a lot of the stuff that was only available to a select few, bringing it down to the many. But you talked about education. How are you teaching people, even the importance of risk? We see so often at Benzinga that people want to look at how high it can go, but not often they forget in what they should do first. Define the risk of where it could go down as well. So how do you guys teach the everyday user actually how to do this?
First of all, everything has to be visual, because we cannot expect anyone to understand everything that goes on into a quantitative model. Our models are quantitative. They actually look at every market, and they look at the relationship in those markets, finds the seasonality, the leadership, and under those circumstances, we find out how the markets performed and what are the probabilities, Monte Carlo simulations to our own price decomposition to sampling models. There is a lot going on under the hood. So the next thing that we basically show first is, once they give us their portfolio, they see, okay, you're exposed to this kind of risk, and in this kind of horizon based on our model. So they actually start visually, and they understand what's going on with their portfolios. And this is a model that they can actually accept or reject, but the bottom line is we basically offer the full transparency about what it is doing. Now, the next step is, once they understand, and based on their investment criteria, because some people will be just investing in indices, some of them will be just doing index rotations, the industry rotations, and some people will go straight into the stock by stock in a much more stock picking level. So for everyone, there is a different level of complexity. And for active traders, this was for investors. For active traders, they can do hedging with options. They can do long shorts. And so they have a different time horizon, and they have different return objectives. As well as for institutions, they would come and invest in a lot more advanced strategies, such as delta neutrals, credit spreads, and in the combination trades in futures options, different markets. So it is possible to essentially show everybody a platform that they can essentially apply to their own risk and return objectives.
All right, let's talk a little bit about the traction you guys have seen. How long have you been taking this to public, or have you taken this public, and where are you going with this forward? And also, give us some statistics. How many users do you have? How do you rate the performance of what you guys have done so far and have seen?
Yes, we run, obviously we've been doing this for about a decade, and we had several models that we tested over time, and over the past 3 years our derivatives models were able to generate in excess of 50% return. But this is selling a return is not what I came here for. I really wanted to tell that I would like to show that we have a model that has a very valid risk model in it, and we apply these diligently to client portfolios and show them what they can do with their investments or portfolios, and how they can essentially protect them from excessive risk when it's a better time for them to rotate their assets, and when the market is down or market is up, it, based on pricing odds, there's a certain risk obviously at every pricing level, but there are times that you should be actually not fearful in jumping in, or sometimes you should be just rotating out, not be too greedy. It's important to essentially show what kind of risks they are exposed before we show them a lot of returns. Because if you manage your risks with under diverse and multiple scenarios, market scenarios, it should be possible to generate above average returns over time. This is what we would like to promote.
All right, you got 30 seconds. You're on the clock. We want an elevator pitch to wrap this all back up. The Benzinga Fintech Awards are all about creating wealth through or for people through innovation, and what you guys are doing. Give us a 30-second elevator pitch on why you guys deserve to win, and very clearly how you're making the everyday person some money.
Okay. Well, we're a Los Angeles-based company outside of Wall Street. We've been doing this for a very long time, and our goal is to show everyday investors that it's possible to see their own pricing risk in their portfolios, and what kind of risks and opportunities there are that they can essentially take advantage of. And we keep emphasizing that it is not about market timing, it's about proper risk management, smart risk management, and this is what we would like to offer on our platform, a platform that is for everyone and a platform that can deliver.
All right, Gokhan, Kisacikoglu from Quants Capital, thanks so much for coming today and taking the time to interview with us.
Thank you. My pleasure.
Right. I feel like the Sherlock Holmes trying to look for clues to find the best solutions to help you guys make money. This is the Benzinga Fintech Awards, looking to help you create wealth. We'll see you next time.
Thank you.